Hi, this is Zach Neal from Zach's Traders Cafe with a look at the major markets on Thursday, the 7th of July. Starting off with the FTSE 100, and the suspicion was that this market was going into a bull flag at the top of the range or above former April resistance 64.20. Bad close yesterday, but still above that 64.20 zone, so still gives us the possibility that there'll be a retest of the main 66.20 resistance over the next couple of sessions. Either wait for an end of day close back below 64.20 or above 66.20 for major direction at this stage. Onto the DAX, and here still that weaker position or weak position that we have here for this market. All about 9,400, and we're really trading either side of that at the moment. Looks as though the main support here will come in towards 92 to 9300 zone. That really has to hold. If that breaks, then there could be a greater or a bigger move to the downside over the next few weeks. Upside at the moment not higher than 97.50, which this market has failed at least a couple of times over the last week. On to the US markets, and for the Dow, still knocking on the door of 18,000 here. Key reversal to the upside yesterday with the Fed news, and once again the backing off on the idea of any interest rate cuts. That was even before Brexit, so after that vote, probably no chance at all, let's say. Above 18,000 up to 18,800 would be the target here, which is a line heading up towards that level from April. Onto the S&P, and for the S&P we've got 2100 still in focus as the main sticking point for the bulls. If we can clear that, then on a weekly close basis, then you would expect at least another 100 points on the upside, especially after this massive reversal, bear trap rebound from below the 200-day moving average that we saw over last week. The upside of 2200 really could be achieved as quickly as the next 2 to 4 weeks after any break of the sticky or difficult 2100 to 2120 zone. 2120 the May resistance. On to the Nasdaq, and here probably a better recovery than many would have expected. The situation here is that we've got this push back within this mildly descending trend channel from March. 4500 the target here, especially while we hold above the 4400 zone, which is basically the area of the 200-day moving average. Onto the currencies and cable, some signs of stability. 128 was the target in the immediate aftermath of the Brexit vote, and you can see we've hit that line there from January. Possibly a run up back towards 130, 131, 131.21 was the initial June support, so that would logically come in as new resistance, but earlier weekly close back above 131.21 would really turn this situation around and suggest that we're not going to head back towards the 120s or the lower 120s over the course of the rest of the summer. Onto the euro, and still in a sideways action here either side of the 200-day moving average. Really not much to gain as far as the recent price action is concerned here. 110 the support line, and 111.80 the resistance so far this week, so wait for a clearance or a breakout outside those parameters. For dollar yen, still grimly trying to hang on above the 100 yen level. I suppose it's at least some consolation to the bulls of this cross that we've managed to avoid sinking below the 100 level again. Low obviously for June was 99 in the wake of the Brexit vote, but at least while we're below the 10-day moving average at 102.20, this market remains a sell into strength and looking for a retest of the 99 yen level. Finishing off with gold, and I was trying to head towards that $1,400 level, which is the target here really over the near term. 1,400 was the 2014 peak, so we're about $35 away from that at the moment, and that should be hit over the next few weeks, or a couple of weeks even, while we hold above that initial, that former June high at 1358 on an end of day close basis. So it looks like a reasonable risk reward trade for fans of the metal. That's it from me. More updates at the same time tomorrow.